Hey guys, welcome to another episode of Steph Sells Homes podcast. This is episode 36, and today we have a very special guest. But before I introduce him, I did want to give a quick shout out to Cameron at ADU West Coast and also Sean at 10K Cards, who handles all of my marketing for adumeetups.com. And if you guys want to, have more, learn more about what ADU Meetups is, you can go to adumeetups.com. And with that, I'm going to introduce my good friend, Oscar Gastelum. And Oscar, I met at one of my meetups. Actually,
Yeah.
it was the Solana Beach meetup, right?
Mm-hmm.
And we hit it off well. We've been connecting, and I know that we're heading towards really dope collaborations together, where we're gonna eventually work together. He's also gonna be a speaker at my next event happening June 29th, which I'm really excited for. And yeah, I think that's enough. I'm gonna let him introduce himself and tell us a little bit more about what he's going to be sharing today. So thank you, Oscar, for being here today.
No, absolutely. Hey, and thank you for having me on. I love everything that you're doing. I mean, I'm seeing that momentum. I'm like, hey, we need to be doing some stuff together. Love the energy. I love, like I said, not only the direction, but what you're actually tackling with respects to trends in the real estate industry right now that I think are crucial to make sure that you're collabing with the right people. I'm a big advocate of, relationships matter, right? Who we work with really is going to dictate kind of what storm we need to pull through. So yeah, I'm all about it. And like I said, I'm glad to be here and share any nuggets that I can share with you guys with respects to private money, mindset, whatever it is you want to talk about.
I agree. So why don't we get started with the mindset piece of it? I think we talked about this offline, and that's sort of how this whole podcast episode came about. Oscar really wanted to emphasize and talk about mindset, and although I feel like everybody's talking about it right now, the importance of it is huge. So can you touch on first, share a little bit about your backstory, like how you got into private money and how mindset has helped you, in your career? You've had a successful career, and many years of experience. So share a little bit about that.
Yeah. So my background, 20 plus years, I think I'm thinking about 23.
Wow. Congrats.
Thank you. Yeah. It's a lot of successes, a lot of failures. So it wasn't always that uphill, right? But that kind of where we can elaborate a little bit more with respects to mindset. But yeah, worn many different hats, kind of worked my way up. I worked for a large national lender on the traditional side, and in those relationships over time, whether I'm wearing a manager hat, area manager, team lead, whatever the case is, to broker, to in that space, in that relationship, you start developing relationships with private money lenders. I had a great opportunity to build a great friendship with a CEO of Paradigm, and we've found a way to collab and kind of bring both of our strengths together and really tackle the private money space, which is really definitely at a B2B. And I've always said, if you think real estate is relationship driven, I mean, the private money side is 10 times that. So you have to really value that, which is an area that I love, especially going to school. I went to school to be an architect. So having to look through a lot of plans and things like that, it really feeds my creative side of things. But, I've realized not only through business and personal life and in sports that the one thing that's common there is our mindset, and I think right now, and I'm glad, by the way, I'm glad to hear more people talking about it. Right.
Right.
I love hearing that. The application of it obviously is crucial, but it starts with the talking, right? Being able to bring it out, because we're not just talking about sunshine and rainbows. We're also talking about the challenges that we come across, whether it's the challenges with regards to business and market or family and kids and time, right? The mindset behind time. But that's been, to me, the biggest parallel between all three, right? Is being able to not necessarily maintain the right mindset, because we're not always at 100%, is really understanding and knowing how to bring it back, right? To keep it focused and driven and disciplined to execute, right? It's kind of one of those things where, we always talk about balance, right? This balance. And I mean, I'm a believer, or I should say, I came to the realization that we're never in balance. We never will be.
I was going to ask you that, like, are we ever really in balance?
But, no, I don't think we ever, I don't think we ever are, and again, I'm more speaking on my personal experience, maybe just the people around me, I don't think we really are. It's always more the pursuit of, right? It's the pursuit of, it's kind of like the pursuit of perfection, right? We're never going to be perfect. Things aren't never going to be perfect. And here's my thought on that. If you ever think you are, then you're not challenging yourself enough, right? I mean, that's the realization of it. But I think we're pursuing balance in our life. It's always like time management, right? And, I personally think that we can't manage time. We can only manage the tasks, right? And then it kind of goes into, right, don't prioritize your list, just your priorities, right? So if you're not finding time to work out, we'll put the workout first thing of the day, right? Set that mindset. And there's certain levels of satisfaction that you're executing certain things. But yeah, just really kind of understanding, and everyone's going to be a little bit different, right? Fundamentals are the same, but everyone's going to be a little bit different depending on your motivation and what season of your life you're in, right? I mean, there's going to be seasons where, you're going to have to maybe work a little bit more, right? And if there's a spouse, communicating that, if there's kids, communicating that, but knowing when to say, hey, I'm gonna grind this out for the next 6 months because I'm setting up a platform for the next thing, or whatever the case is. Or it's a fitness journey, right? So say the next 90 days, like this is what this is going to look like. And then it just becomes a lifestyle, right? Versus like, I tell people like a diet or these forced things. You have to look past what you're doing while still focusing on the task on hand, right? Right. The old saying of stop focusing on the 20 pounds you want to lose, right? Or you keep saying it's 20 pounds and 20 pounds and 20 pounds versus just saying like, hey, my healthy lifestyle, I get the opportunity to do these 3 things. And these 3 things is what's going to get me to the end result that I'm looking for, right? Which is the 20 pounds.
Right. It's the daily, I always say, I don't know where I heard it, but trying to get 1% better each day, right? Versus looking at the it is a long-term play as well, since we're in real estate and we always are advising clients to think in long-term, with time blocking. I always tell the girls on my team, you're not just time blocking the tasks and what you're supposed to be doing within that time frame, but you're also time blocking your energy, your thoughts, right? Your habits. And, I have on my calendar every day, 2 to 4 is mom life. And I can't mess with that. Like it is what it is.
That's
right?
A non-negotiable.
It's a non-negotiable. Exactly. Exactly. So having those non-negotiables set in stone, because like you said, you can't control time, but you can control your thought patterns, your energy, where you're focusing your attention, in order to maximize the time, right? And maximize, I don't even know how I'm able to do everything that I can, but I will say it's through time blocking, right? And just focusing my time and my energy, and then also surrounding myself with people that are in alignment with that. I know with you, one of the things that I like is, and I was telling you offline, was your family. Your family, I see the huge role that your wife and your kids play in your life, and the support system that you have, right? Like tell people a little bit about that and how that's helped you personally.
Well, I got to tell you, I learned the hard way, right? I was that
Let's be honest.
I learned the hard way. From a previous relationship, everything was, I think naturally as men, we're providers and we just want to work. That was at the mercy of my relationship at the time. That was also at the mercy of my mental and physical health, right? Now, granted, in that time, if you were to tell me that, I'd say you were crazy. It took years after to reflect back to realize that. And I told people it took me 30 some odd years to kind of figure things out, not to say that they're perfect, but I'm constantly working to challenge myself and grow, kind of going back to what you're saying, that 1%. So I embrace every year. I don't say I'm getting older every year. I just embrace every year, right? Because I'm excited to see who I'm going to become in those 5-year increments. Right. And I made a commitment to myself that if I had the opportunity, right, to start a family, what my commitment was. So that was kind of like a rite of passage that I had to go through. I'd never been married. It was just a long-term relationship. It was more of a rite of passage. And then here lies the opportunity. So I knew going in what my negotiables were going to be, right? I realized that my mental and physical health played a huge role in that. So there had to be a level of selfishness, right, in order for me to continue to be a better version of myself. We talk about wearing these different hats. It's not just being a better business person. I need to make sure I'm constantly looking for growth to become a better husband, a better father, a better mentor, a better coach, whatever it is, it's constantly that pursuit of, you know, time management kind of falls into that, right? Those non-negotiables. You hear people like, hey, I have kids. And it's like, oh, I would have done this if I didn't have kids, or I could have done that if I didn't have kids. And my belief on that is, you know, kids are going to enhance who we already were, right? So if you were unorganized before you had kids, you're going to be 10 times more unorganized with kids. You know, I used you as an example. If you were a hard worker before you had Alex, right?
Right.
Before you had Alex, you just became 10 times more of a hard worker having Alex, right? They're going to enhance us who we are. Granted, you know, there's those challenges, kids get sick and things, what have you, but that's also life, right? And that's also why we have to respect the times, right? I would say there's those income producing times, right?
Right.
There's the health and fitness times. There's Alex time, right? That 2 to 4 slot. If you respect that long term, right? The long-term aspect of it, you'll continue to be a better version of yourself. The way I see it is, I need to make sure that my mental and physical health, right? So it's always like, it's not for the vanities, for the sanity. It needs to start there, right? Because that's what's going to help me be a better person at home, which again, there's 3-4 different hats at home. If things are good at home, that's going to allow me to be a better person in business. Let's be frank, because if things are falling apart at home, I'm not thinking straight at work. Right. So they all kind of go hand in hand, and we have to respect that. Right. I know some people say, hey, you know, 24/7, money never sleeps, dialing for dollars to me. Yeah. I was sold on that early in my career. That sounds sexy. But for me personally, my model of what my life is and will continue to grow into is not in line with that. That may work for someone. Right. That may work for them, and that's okay. But for me, my health, and like I said, my family, my beliefs, my business, all of that are crucial, but I will never put any of that at the mercy of my health and my family, right? So the better I can continue to be as a person, the better I am. And the better person you are, the better relationships you're going to be able to nurture, right?
Yeah, I think you're bringing up so many good points, and the common theme that I see and that I hear is having a good relationship with yourself, right? The relationship you have with yourself sets the tone for all. Exactly. It sets the tone for all the other relationships that you have. You know, you're projecting and you're transmitting that same energy. So I've been on a growth path, you know, to become a better version of myself, because I know that's who I'm going to attract. And that's who I'm going to attract in my personal life, but then also in business. And it's aligning, right? Like you saw the lineup we have for the next meetup, and you've seen the other meetups that I've had. It's all been very intentional, and I've put myself in a position where I attract those types of people, but I've had to do a lot of inner work. And especially as women in the industry, I feel like sometimes we lack confidence. We have limited beliefs that you also have to like just filter through and sort of rewire your thought patterns. And that all ties into this whole mindset, which I know we're sort of spending a lot of time in, but I feel like it's important. It's important that you have a good mindset structure for yourself, which then will reflect in your personal life, and then in your business life, and every aspect, and especially in business. You know, like I'm sure that you know this, like if we're struggling in business, it's probably because we are struggling in other aspects of our life, you know, that just don't allow you to see clear.
Yeah, it's like I said earlier, we spend all our time with us.
Exactly.
So you talk about, like, you know, protecting the mental health aspect of it. Like, what are you consuming, right? Like, what are you reading? Who are you hanging around with, right? And sometimes you have to be very intentional, right? That's a big word in this video here, in whatever aspect of it. You have to be very intentional, because you have to protect that space. You know, in 20 some odd years in the industry, I got to tell you, it's only been about 6-7 years that I've been able and successful at protecting my space with regards to business and who I decide I want to work with. And, you know, because if someone's toxic, I don't care how much production they're doing, if someone's toxic, that's going to put me in a bad headspace. And, you know, I'm going to end up taking that home. Now, my families don't deserve that. My body doesn't deserve that.
Right.
So again, it's playing that long game right? That marathon we talk about and protecting that space, and you'll end up attracting whatever you're able to attract by taking intentional actions, right? Like, I mean, one of the things you touched on, and that's been recent in some of the conversations I've been having as a strong woman, right? And I have very strong women around me at any given time. So I'm all about that, right? I'm going to say you could be a strong woman and still be feminine, right? And
100%.
my personal belief is
Yes.
men, especially culturally, we're the hunters, right? So don't worry about looking for a man. I always say, you know, it's kind of that old saying, that my old saying, where I used to have conversations with female friends. It's kind of one of those things where it's like, if someone's giving you a laundry list of the man that they want to attract, and that could be also in business, right? Like, what is your business going to look like? Who do you want to attract as a man? Like, who's that model match male for you? If I grabbed that person and sat him next to me, right? And I asked him, what are you looking for in a woman? If they're not describing you, then that's who you need to grow into, right? That male might want someone who's strong and hardworking and loves kids and understands the value and you know, whatever the case is. But we have to grow into that. Same thing with respects to business, right? We want it. We want this business and we want it to look like this. It's not just an income number. What does it need to look like? Great. Then who do you need to become? Right? Who do you need to become to have the right to that business? It's kind of that old saying, you know, it's been twisted throughout the years. Is fake it till you make it. To me, fake it till you make it. It's if you're drinking your own Kool-Aid and really thinking, right? Because of social, whatever, that's one thing. I get it. But initially, the fake it till you make it is you need to be a champion. You need to train like a champion. You need to think like a champion. You need to do everything that a champion does before you become the champ, right? Well, it's the same thing in business, right? If you want to be a great husband, then do things great husbands do, right? Versus doing all these, you know, other mess. They're not going to attract that person, right?
Yep.
Wifely things, right? We play different roles, right? And we see it. People say it, right? Like, oh, you know, she's wifey material or he's husband material. Why is that? We have to, you know, you can argue that, right?
Like, what is wifey material?
Right? Well, it's different to everyone, right? It's different to everyone, but people do say it, right? And it's kind of like you have to be the champion in whatever space you're in and train like one. And right? You know, if you go to
the training is a huge component, but I think it's also like that saying, you know, whether you think you can or you can't, you're right.
Right.
It's whatever you think of yourself, that's where it starts. You know, if you don't think you're going to be successful in this business, then you are not. If you think you are and you think abundant and you think that by you putting yourself in a position where you're going to become that ideal person, you know, that you want to be in business or that you want to be in your personal life, then you will, you know, through action taking. But it starts with the belief system.
100%.
I think that plays a huge role. And one of the things I wanted you to touch on too was the 1 hour power session. Can you touch a little bit on that and kind of share?
Yeah, so I had the opportunity to do that for a few years through ESPN on their business talk. They had a 3-hour time slot. I had one of those hours. It was a core hour.
Okay.
Excuse me. Where we were able to tackle, I mean, initially it started off as like real estate, but that kind of morphed into more than that, right? Where it was like almost more lifestyle with a sprinkle of real estate. Right? There's only real estate and lending and things like that you can shove down someone's throat, right? I mean, I don't like talking about that as so much. I think at the end of the day, it goes back to the relationship aspect where you're talking to people. But yeah, I had a lot of fun doing it. You know, you meet a lot of great people. I got to interview a lot of great people, support a lot of nonprofits, right? Through that and kind of give them a platform. In the end, for me, being that my background was in lending, you know, again, it just allowed me to collaborate with a lot of great people and share some common interests, right? Which allowed us to develop strong relationships. So
which then I'm sure translated into business, right?
Oh,
like I know that's happened to me a lot. Oh yeah, exactly.
Right.
Organically,
so
right.
You know, I'm not that guy that's at a you know, some people might agree with me or disagree, but I'm not the guy that's, you know, at a gathering you know, with friends and constantly talking real estate or lending. I don't talk about it. I rather, connect with people, and then they find out what I do. And if they want to know, they ask me, I'll be more than happy to share it with them. But I don't lead with that. I know some people, it's kind of like that secret agent, right? I get it. That works also, right? It's just not my style. And again, you just got to figure out what your model match is going to look like, what your business model, and then run with it. There's many different ways of running a team, running a business, and being successful, right? It's just, if you're complaining about it, it may not be your fit, right? So it's basically how that works.
Exactly. Yeah, I think if you don't have clarity on what it is that you want to do and how you want to do business, then it'll show. It'll show in your business. So having clarity, I have built my own, model throughout the years as well. Because I remember I've been in real estate for 10 years. And when I first started, it's the whole grind, work until you can't breathe anymore, sleep for 2 hours,
Absolutely.
And after I had Alex, things slowed down for me in the sense that I was just like more present, but I learned how to maximize my time, and so I took a few steps back. I wasn't working crazy long hours. That's when I understood time blocking. That's when I understood how to take my time serious and who I'm sharing my time with, all of that, who I want to do business with. At first, when you're starting off, I know for a lot of like realtors or just people who are listening to this are probably having to deal with certain clients, right? Because they feel like they have to, they have to deal with certain people because they're bringing business. But when you shift your mindset to understand that you yourself bring value to the table through relationships, through values, and just commonality that you have with the other person, like Sydney, who we have in common, right? I can think of Sydney all the time. I love Sydney, such a good friend, and I love everything he does. And we've done business together, but it started off with us having a dope relationship that then became like, okay, he's my appraiser go-to and I can hit him up whenever. And it's so cool to have access to a network where I can call them friends and we can text each other and we can share knowledge, we can collaborate, and then things just happen organically. Like that's the business that you and I are in. And I think
man, you hit the nail on the head. It's kind of like I said earlier, we have a tendency of selling each other, right? I'm available 24/7. And reality is no one's available 24/7. If they are, I'd be concerned, right? But here's the thing, right? When there's a relationship, it's not like, hey, Stephanie's calling me at, or excuse me, the realtor, is calling me at 9:00, 9:30 at night. It's Stephanie. And I'm like, what's up? Right. It's easier to take those calls. And, I've even said that even in the corporate world, right? Like if I have a loan officer calling me and I'm looking at my phone, I'm like, I'm like, that's not a good sign. Versus like, yeah, what's up? Like, we're here to help each other. And that relationship goes a long way. And then again, you don't have to sell each other on the sexiness that may come with the industry. But I want to kind of backpedal a little bit. You touched on it a little bit as far as like, when dealing with people, right? Whether they're toxic or they're reactive, right? Maybe they're not toxic, but we have a tendency as an industry.
Or the expectations are off, right?
Expectations are off, and there are people that are reactive, right? When we're in a good headspace, I don't know if you notice this with other people that are in a good headspace, when things are going not as planned, we'll call it, right? Not as planned, the right people have a tendency of responding versus reacting to that. And we have a tendency of dealing through things a lot better. And I've always said that, we've closed the most difficult transactions with the best people that we've worked with. And we continue to do business versus the pointing of fingers and saying, hey, that reactiveness. And I'm like, well, again, that's why it goes back to, there's a lot of, to be said with who you work with matters, right? Because we sell this perfect world, but if it was so perfect, then the clients wouldn't need us. You guys wouldn't need us. Like, there's reasons why you put a team together. It's to foresee any possible challenges. But when they do come up, because they may, and they do, do you have the right team put in place to work through this to make sure that it's a win-win for everyone involved in that transaction, right? That's why it's important to work with the right people that fit your model.
It does. And can you touch on that? So let's tap into what private money lending is, because we're all here to learn about that. And I don't know much about it, but I'm sure that relationships and the communication and just the relationship that you've established with your team on the back end, like tell us, what is private money lending and who is part of that team and on the back end, right? And how important is that team structure?
So when people,
a lot of questions, but
yeah,
one at a time.
I'll try to tackle those as best as I can. So with regards to mortgages, I mean, I think for the most part, a lot of us know, right? There's traditional financing, whether you're dealing with a broker, institution, or type of portfolio lender. There's layers of qualifying when it comes to that, right? That means you have to fill out an application. There's tax returns, there's bank statements, there's W-2s and things of that nature. And they're looking at it from 3 different perspectives, right? Cash, credit, and income, and looking at a debt to income ratio and seeing if someone can afford that mortgage. Traditional escrow is anywhere between 20 to 30 days. That aside, the next layer to that is typically a private money or a hard money lender, right? And that just means whether it's a true private money or hard money, which can be an institution, right? Both are great. It just depends on what the person is looking to accomplish. Who takes advantage of these mortgages? Typically, it's the investor type client, right? Someone who's fixing up a property and flipping it, or adding square footage, or possibly, maybe adding an ADU. There's a lot less needed to qualify. There's different private money lenders underwrite files a little bit different because they control the fund. So they decide how they're going to want to underwrite the file. I can tell you for us, without going into the details of it, but it's pretty simple. As far as like, one, we pull credit. We do like to see 680 and above credit scores.
Okay.
Right. So we like to deal more with accredited investors, right? People that have the experience. We're not the type of private money lender, someone that's never flipped a home and wants to come to us. We may not be their fit.
And what would be, for those who don't know, what non-accredited and accredited means?
Just someone that has experience. What's experience? That someone that's had 2 to 3 flips under their belt, right? Then that's someone we can look at. And we do look at the property that they might have done, in the last year, and kind of see the quality of work, and did it sell for the price listed or above, right? Meaning, were they able to work their budgets out the right way? We're in the business of making sure that those investors and those flippers succeed. So we're not just like, hey, here's the money, go figure it out. We do become, in a sense, a partner in the deal, right? Where we're looking at it and saying, we're looking at the budget, right? We're looking at, depending if it's commercial or not, the pro forma, do the numbers pencil out? Does it make sense? And if it's not, then we're talking it through right up front if they need to make some adjustments before we even get involved. But if we bring it just back to the traditional value add, right, or forced equity, some people like to call it, where someone's picking up a property, then we're going to want to look at, what's the acquisition cost, what's the construction cost, what's the end value, and then what's the exit strategy, right? Is this something that, hey, once the home is built, they're going to need us to refinance them into a traditional mortgage at that time because they're planning to hold the property and maybe rent it, assuming it's residential, or they plan to put it on the market, right? And then turn around and sell it. So we do look at, okay, what's current market time? Typically a private money loan, you're looking anywhere between 6 to 12 months. Sometimes it's 18 months, depending on what they're looking to do. But I want to go back to kind of some of the criterias that we look at. So like I said, a 680 credit score, we do a background check on them just to make sure there's no like liens, lawsuits and things of that nature. Anyone that's been in the space, it's very common, right? Are they up to date with taxes and things of that nature? So as long as that passes through and they have right now some liquidity, right? You got to have money. You
have to have reserves. Yeah.
You have to, because they're holding costs, right? So
I think a lot of people don't know about that. In the ADU world, I've worked a lot in the traditional financing for years, but when I started niching down into ADUs, as you know, one of the main issues that we have right now is financing, right? Like financing an ADU. So people try to get creative and do partial traditional with an attachment of hard money and private money, but then it doesn't pencil out because the value is not there. Unless we get Sydney to come out, then it may pencil out. Then like it's a whole shit show when it comes to the ADU financing. But holding cost was one that I was working with some investors in Highland Park. They didn't take that into consideration, and these ADU projects take time, right? It takes about 8 to 12 months for the turnaround time. And so that's the struggle I see. That's what I was curious to know. But you sort of
So, I
answered
mean,
my question on how you guys assess risk, right? So,
yeah, I mean, we're going to look at, we want an ARV typically at about 65 is the ideal or under,
mm-hmm.
up to about 70%, of the after repair value. I mean, reality is most investors should be looking for that number anyways, right?
Anyways,
In order
exactly.
to make
Right.
your time worth the investment and the return.
Mm-hmm.
But yeah, I mean, typically that holding costs, I mean, what does it entail, right? So I'll give you an example. If someone's going to acquire a property at, 500,000, right? Just for simple math, 500,000, and there's going to be 200,000 in construction costs. We'll fund right now we're at about 20%. So 20% of the total cost, right? So that means purchase price plus a cost of construction, 20% down. So now that's your down payment, aside from any closing costs associated with the loan. What are some of the things you need to be prepared for? Of course, payment. Typically, it's going to be an interest payment, and you need to figure out like, hey, how long is it taking right now to get plans,
Right.
architect designs stamped, approved, and ready to go vertical, right? In a sense, start construction. I mean, in Long Beach, what would you say that's taken about 6 to 8 months? I think I heard you say.
Yeah, I mean, Long Beach is pretty easy to work with, but yeah, it's 4 to 6 months.
Okay, so let's just say 6 months, right? So you have interest payment for those 6 months, right? So in the construction, by the way, I'm going to backtrack a little bit. I think I got ahead of myself. The construction aspect of it, one is the acquisition. So for the most part, lenders aren't going to lend the funds for construction unless you have plans ready to go vertical, right? So if you're going to acquire the property, hard money, right, at 20% down, right? Then at that point, if it's simply an ADU or if it's a true value add, I mean, that could take 12 to 18 months, right? You're holding on to a private money for 12 to 18 months. Once you have plans to go get approved, you refinance into the construction loan, right? Which at that point, now we're adding in the construction costs as long as the after repair value is there. And then the construction begins. The holding costs, like I said, it's whatever time it's going to take you to build. If it's going to be 6 months to build, you need to factor in 6 to 8 months, right? Because there's going to be delays on construction of interest payment. You have to be prepared for phase one, right? So if we fund the construction right now, most lenders are not just giving you the money. If you say here 200,000, here's the 200,000, right? Unless you've already established some history,
relationship,
right?
Or
history, with a private money lender, then yes. Then we're just speaking in traditionally, right?
The lights off.
Yeah. So the 200,000. So if you're going to do phase one of whatever that construction is, and that phase one is 50,000, aside from your interest payment, you need to have those 50,000, right? Because whatever that 50,000 entails, it's grading the concrete costs, the laying of the concrete, the labor,
every phase and every phase of the project, right?
Right. So you have now your 50,000 of just phase one. Well, now you put in the draw, right? So now you go to the lender and say, here's what I've got in. This is the work that's been completed on phase one, not just material, but material and the material actually put into the property, right? So that material doesn't go somewhere else.
Right.
And then you get the draw. So the lender will do their inspection, say, yes, check. You've got 50,000 worth of work and material into the property. Here's your initial 50. Now that 50 will just continue to roll, but you have to be prepared for that phase one and holding costs that come. And this is all part of kind of building that into your budget, right? It's not just, hey, it's going to be 200,000 in construction and the property is going to be worth this. This is what I'm going to make. You have to factor in the closing costs. So that's why kind of going back to private money and hard money, it's a lot more expensive, not a little bit. It's a lot more expensive than traditional financing, but the private money and hard money lenders also at short term, where traditional financing, especially have multiple projects going on, they're not going to want to lend you on multiple mortgages at the same time. And traditionally, they don't want to be paid off within 6 months anyways. Private money, the quicker you can pay them off, the better. The better you make your profits, the better they are in getting their money back and rolling things over. There's sometimes you talk about misconceptions, right? That people might say, well, why, if anything goes sideways, the only person that's going to lose is the developer or the investor, because the lender could just foreclose on the house and, there's 30% equity in the home. I mean, reality is that for the most part, lenders are not in the business of foreclosing. that's not the business they're in. So they
Right.
need to set you up for success. They're going to do and underwrite a file from a risk perspective, not only for themselves, but also for you as an investor, right? Like I said, we need to make sure that they're set up for success.
I mean, you touched on a lot there. I think that it hopefully gives people clarity and really helps them understand the process on the back end. I feel like private money can sometimes be intimidating, especially for a lot of the new investors, because you need to understand how to underwrite a deal. You need to understand how to read a pro forma, how to analyze it, and how do you even look at all those numbers and those metrics when you really don't even know as a new investor. So in cases like that, would you be able to partner up, with somebody who has the experience? I
Yeah.
think that'd be a good way to for those new investors
Yeah.
to
If
tap in.
someone asks, like, how do I get started? I mean, I
Hmm.
think, you
Hmm.
got to get your stripes under your belt, and there's
Right.
nothing better than partnering up on a deal with someone that has the experience. That may mean, obviously sharing the or that person getting the bigger piece of the pie at the point of sale, and that's okay because you're getting some stripes, right? Get those 2-3 transactions under your belt,
Right.
especially if you're not just involved indirectly, but you want to be directly involved, right? Because you want to be able to show, right, that let's just say that they're done under an LLC, to show that you're actually a partner in the LLC. Because
Right.
when you're ready to break off and do that fourth transaction on your own, you need to be able to show a private money lender and say, look, here's my experience. Here's 3 closing statements with, Flip Your Home LLC, and
Hmm.
showing that you're a partner of it and seeing that you have the experience, right? Now, even then, the loan can be a little bit more costly, but that's where you have to establish a relationship and have a track record, right? The more that you're doing, right, that you're showing the private money lender that you have the ability to perform, you have the relationships put in place to turn this asset around, whether it's to hold or to
Hmm.
put it right back in the market, and you establish that relationship. Ultimately, our goal as a private money lenders, we essentially want to become your wallet, right?
Right.
So the cost and the risk come down, right,
Hmm.
over time. So you have to earn those stripes. If you're hearing people like, hey, I'm flipping with 10% down, well, guess what? I guarantee you talk to that flipper, right? Or
Yeah.
that value, it's more value add right now because no one's really doing it within
Right.
technically
The
3
flip
months.
world is on
Yeah,
hold right now.
yeah, that's basically at a standstill. But
Hmm.
the investor, the value add, right, the forced appreciation, I guarantee you that those investors earn their stripes. They did not start working at that. They've developed those relationships, and obviously their margins just continued to grow, right, with experience, because you're able to foresee the right investment, but
Right.
also from the financing aspect of it, where the holding cost becomes a lot less for you, right? So you have to earn your stripes.
You got to
And
put
yes,
in the work.
partnering up with the right people matters, right? It goes back to relationships.
Right. Once again, back to relationships. No, I mean, I think you gave us a pretty good overview. Anything else that you think people maybe have misconceptions on, maybe should look out for? I mean, how do you vet the right private money
Some of the strategies
company?
that I think we've seen some of, not only just our investors, but just
Hmm.
even your traditional consumer, right? And I'll start there. The
Hmm.
traditional consumer that bought the home, has a low interest rate, um, has plenty of equity, right?
Right.
Doesn't want to refinance and doesn't have the real capital to build an ADU, right? If the equity is there, right? First channel is to try to obtain either an equity line or a standalone second, right? An equity line, of course, typically it's an adjustable rate, and you're making payments based off of however amount of money
Hmm.
you're drawing, kind of like a credit card.
Right.
Standalone second, right? If you're borrowing 300,000 to build an ADU, then you're at closing, you're going to get those 300,000, right?
Hmm.
Immediately. So it's kind of like the upside. You do control that money. It's not like private money where it's based off of draws.
Right.
And you can start there. That's one area, right? And if you say, hey, especially like you, Stephanie, you can talk to that consumer and say, hey, look, based off the cost of square footage here, if you're building a 1,500 square foot ADU at 300,000 cost,
Right.
that 300,000 is going to make you an additional 500. And I'm just using a number, right? So that
Right.
300 is going to make you 200,000 on the home plus whatever rent. So essentially, if there's a payment on the second, you want to make sure that the rents for that ADU upon construction, cover the cost of the second, which most of the time it does.
It does.
That's what we rent nowadays. And then on top of that, like I'll have an example. They're renting it right now. One family member is renting their ADU, just finished. They never thought they'd get $4,000 for this ADU, right? Their payment on the second is just under $3,000. So let's just say $3,000, and then they have an additional $1,000 that's going towards your traditional mortgage. So this investment is actually saving them $1,000 a month, aside from the tax benefit that comes along with that.
That's what I was going to say. The depreciation now from, renting it out. And also
appreciation of the home, right?
Appreciation of the home.
So, I mean, it's a win-win. You just got to pencil that out. The other aspect of it is upon, acquisition for some of these private money lenders, right? Where they would come to the private money lender, say, hey, I need a loan for $500,000. I'm buying this, this dump, right? The property's not in good condition. Well, I mean, let's be frank. Some of those houses aren't that bad. And if they're planning to add, like there's a group that we deal with, if they're planning to add, 6 ADUs and stack them in the back, and the property is financeable in a sense, right? Meaning if they just paint, carpet, they can rent it out. They can take advantage of a non-QM loan, right? Which is going to be less expensive.
Right.
It's going to take 20 to 30 days, right? But in some of those investments, you may have the time, right? Rates are a lot cheaper. Points are definitely a lot cheaper. You will need a little bit more documentation, depending if you qualify the traditional route. But with the DSCR loan, right, as long as the property has the ability to rent for $1 over and above the proposed new payment, and you meet the credit score requirement and you have the 20% down, right?
Right.
Then you qualify. You don't have to worry about providing income documentation, pay stubs, W-2s, and tax returns. You're basically just going to provide proof of funds. You have the assets. You meet the credit requirement, right? And then you can show, based on the appraisal, that the property can actually rent for that dollar amount. So now, while you're holding that asset for 12 to 18 months, while you're going through plans and permits, because that's a larger construction, right? It's going to take a lot longer. Now you're not on a time crunch with the private money lender that they have to be paid off in 6 to 12 months. Because then there's cost to extend or cost to refinance out of one private money lender into the next. Right. And now that asset, not only are you not in a time crunch, but now that asset is also making you money.
That's what I was going to say. It's now producing some income for you. Yeah. No, I mean, I think it's great. And, you're based out of San Diego, and in San Diego, you guys have the ADU density bonus rule, which is a very, very good law that you guys have over there, because I don't think it's anywhere else. But it helps you maximize, if I'm an investor, I definitely consider San Diego, looking at properties that have ADU potential, because with that density bonus rule, you can add multiple ADUs. I think I saw a video of this guy who was doing, I think, a proposed like 30 ADUs on a single family lot because of where it was at, in San Diego.
The most I've seen, not just heard of, the most I've seen is 10.
Well, I saw a proposal yesterday for 60 ADUs. That is nuts.
It's nuts, and it's awesome at the same time.
It is, right? It is.
You're also, to be frank, it's affordable housing to some degree, right? For those folks.
Well, if it's affordable housing, you can probably build even more, right? So that's another strategy there. There's so many different strategies around it, but that's one of the reasons why I'm gearing more towards multifamily, and why I think you and I will be doing a lot of business together, because in multifamily, the traditional lending sort of goes out the window. Everything we talked about is very good for your typical homeowner, maybe first-time home buyer, maybe first-time investor, or even seasoned investor in the residential space. I think what you talked about as far as HELOC loans and, the DSCR loans have been very popular, the non-QMs too. But in multifamily, it's just a different beast. So I'm excited to tap into that space and advocate about ADUs, because there's so many strategies around that.
And here's the beauty of it. And this is why I love that you're a huge advocate of this and really kind of pushing this intentionally, because I think a lot of times, as an industry, unfortunately, sometimes we're very transactional in a sense, where we say it's about the client and we help them get in. But we're really talking to our clients and showing them based off of our actions is really showing them how to have this be a vehicle for them, not just a debt, right? So if they bought that house, you know, especially culturally, right? They have their little casita, right? They never think about buying another rental property. But now with like ADUs, it's like, hey, have you guys ever thought about this, right? Or, I mean, it could be lifestyle too, right? It could be in a sense where, you know, grandparents or parents, right? You know, they may have their own mortgage. That may be an opportunity. They don't need to hold that property. They can sell it, build the ADU. You have that forced equity, and take different advantage of how you can structure the future of that family, right? As their advisor, right? Versus just saying, buy now and here's the mortgage. And I mean, that's the beauty of what we do. I think sometimes we lose sight of that. The other aspect of it, we're talking about it, you know, a little bit in the beginning of our conversation, but our industry is constantly evolving and constantly changing. That's how I personally have had the ability to do it 20 some odd years, right?
Yeah, exactly. That's what I was going to say. You know a thing or two about pivoting and changing.
I mean, you build some resiliency, but you have to stay on your toes, embracing technology, understanding trends, understanding markets, and how to use all of this to your advantage versus falling victim to it, right? I mean, you talk about like, you know, was it March, April last year? Everyone was complaining that, you know, the houses were selling in -6 hours, right? There's so much more, and no one was calling them back. Right. Well, the market has shifted, so you have to do some actual work, right? But that's also creates more value for us as professionals that we're able to bring to the table. It's like there's opportunity and there's challenges in every market. The question is, how are you going to tackle those to get the end result, not just for you, but for your client or for your investor, or for your sponsor, wherever it is? That's what's going to separate the good from the great.
Well, yeah, I mean, I think ultimately too, like one thing that I know you and I both have done is probably I've grown with my clients and I've seen them grow throughout the years, right? And I know I've been to so many listing appointments this year that have turned into ADU consultations because, you know, I open up their mindset to why sell, or if you are going to sell, why don't we look at a 1031 exchange with the ADU play in mind? You know, why don't we open up your mindset to not having to sell, right? And maybe grow your portfolio. How about that? How about we analyze your portfolio and see how we can maximize space, maximize the amount of doors that you have, because that is really where I feel like we change people's lives, you know, and it's not just a transaction based model. It's once again, a relationship model. And so if I teach my clients how to grow their portfolio, who do you think they're going to work with when they want to grow it and build and, you know, buy? So one of the things we'll be touching on a lot for the meetup is doing just that, like showing our community how to use banks to leverage funding, and then how to use tenants to offset and pay off that debt. You know, that's that simple, but you need a team.
Yeah, absolutely. You know, it's funny. Especially culturally, you know, just say to someone like, realize that you can be a millionaire. Just it's not even in their vocabulary, yet alone in their thoughts, right? And we, as advisors, can kind of show them the step by step and showing them and saying it's not as hard as you think, right? And you can be built through real estate while still holding your traditional W-2 job, right? And build that generational wealth that it's literally you're changing the trajectory of that family, right? Because you know. And then before you know it, the kids are coming to you, and who's showing them how to putting them in contact with the right attorneys so that they establish trust. And, you know, again, the generational wealth of that family versus just being a debt, right? And really being able to change their mindset and their approach to the luxuries that we have here in America, right? That we take for granted sometimes.
That we take for granted, yeah. And you know, sometimes we take for granted, or we're stuck in this mindset where we feel like we have to struggle, you know, and it's really not the case. Like knowledge gives you power, knowledge gives you confidence to make moves and make certain decisions that are going to help you and your family. And through knowledge is how you also keep up with the generational wealth. You know, it's not just about handing off properties to your kids, but like showing them how to maintain those properties, how to keep them and grow it and scale it. That's a whole other beast that we can get into. But, you know, we were supposed to do this for 30 minutes. I told Oscar, and I know his wife and kids are probably like, what the hell? And we're still here an hour later. Yeah,
Like
I
you're
see
ready
her.
for me. I want to
My
piggyback
phone's
really,
going off too.
and
So
that's why I tell you, you don't have to worry about me talking. Like
yeah, yeah.
I
I
love
could
having
talk for
great
hours,
conversations.
but I think we finished it off with mindset. Mindset matters at the end of the day, and we started off with that, and that's sort of the main topic of discussion today. But I really want to thank you, for all the information that you gave us, and I'm excited, if you guys want to like get to know Oscar in person, he's going to be one of the speakers at my next event, ADU meetups happening June 29th. So make sure you guys check that out. Make sure you guys check Oscar out. Oscar, how can they get in contact with you and maybe book a consultation for any of my, maybe not the flippers, but anybody, wanting to do some sort of value add, right, for properties and are looking for private money options? How
Yeah.
can they connect with you?
Cell phones, obviously the direct line, 619-726-6827. I'm very active on social, especially Instagram. So you can DM me there at at all_in_OG. So all in with OG, right, on Instagram. You can find me there, or I'm sure you can find me in Stephanie's stories.
Oh yeah, definitely.
But I want to piggyback off of something that you said, as far as like knowledge is power. So my add to that is knowledge is potential power, because unless you put it to work, it's useless.
Applied knowledge is power.
Applied knowledge is power.
You don't let me finish. You don't let me finish.
It's okay. It's all right. Hey, we're on the same page.
I know what you meant though, but yes, I agree. And we can cover another episode, on applied knowledge and applied everything that we talked about. So
yeah,
hopefully it gave you guys some insight though, and hopefully some of you connected with Oscar. We're going to be doing a lot of collabs together, and I love that he's all about the Latino community too.
Yeah,
so what part of Mexico is your family from?
So I'm born in LA. I'm originally from LA, but my sister and my parents are both from Mexico, of course. My dad's side of the family is from Culiacan, Sinaloa, and my mom part of the family is very local in Ensenada. Even though most of my family, if not all, my dad's family is either migrated already to Ensenada or in different parts of Southern California.
That's so cool.
And I am fluent in Spanish, and Spanish is my first language. Sometimes people either.
Well, I was shocked. I was like, Oscar speaks Spanish?
Yeah, it's my first language.
Oh, that's awesome. Yeah, no, we're neighbors. My mom's from Sonora, Obregón, Sonora. And my dad's from Mexicali, San Luis, kind of.
Yeah, so it's kind of the same, right?
Yeah, so we're almost like on the same side. But yeah, I think what you're doing is great, and just sharing knowledge with our Latino community. It's also relatable to people, that look like you and I, to know that they can also be in these spaces. So plug in, make sure you guys tap in every week. And I want to thank you again, Oscar, and I want to thank all the listeners. And I'll see you guys on the next one.
Let's go. I'll see you soon.
Bye.